Without a doubt, we just saw the biggest housing bubble in the history of the US real estate market. It is now crashing and collapsing in some markets, some particular segments like commercial real estate, but in other markets, we are actually still booming. So we're going to talk about this supply side dynamics that are keeping the real estate market propped up and booming in some areas, while in others, we are seeing the market get completely sacrificed. So today is Tuesday, November 7th. We got a full real estate update for you. But before we get into the real estate, let's check where our markets are at right now. I am your host, Zach Rector, and thank you for stopping by this morning. Now let's get started here with our cryptocurrency update. 34,746 for your Bitcoin, 1866 for Ethereum, and XRP back to the 5 spot, giving it back up to Binance, back down to 67 cents for XRP after yesterday's pump took us all the way up to 73 cents. That was a fun one to see, but back down today for XRP. $37 billion market cap for Binance and $36 billion market cap for XRP. So we did lose that 4 spot. That is not what we wanted to see. Now back on into it. XRP, like I said, back down today. This is your daily chart. Bitcoin cooling back off once again. Been hanging out at this 34 to 35K level for the past week or so. We'll be watching this one closely. And of course, this is because the DXY back up today. You see a little bounce in the 2-year, little bounce in the 10-year. Okay, basically hanging out sideways here still though for the 2-year and the 10, but we did see that the UK oil, Brent crude oil, this is the worldwide benchmark, did come down actually significantly today, down about 3%, down to $82 per barrel. Okay, so maybe we're going to start to get some cheaper prices at the pump. And I don't really get what this news, what this is off of. The news that came out yesterday was that Saudi Arabia and Russia were going to continue production cuts. So I don't know what's leading to oil prices falling off here again today, but hopefully that'll lead to some cheaper prices at the pump. We're watching right now as silver back down below 23, back down to 22.5. So we have a little bit of a sale right now for silver. Same thing taking place for gold, back down to 1964 for gold. Now the stocks have continued to rally. Nvidia back up here again. And we're watching as Nvidia has been in correction territory, but it's done this once already, right? With a little bull trap rally earlier back in October, I should say. Little October rally, right? But then that was before the news came out that Biden was banning the chip sales to China. And that's what brought us back down here below 400, watching Nvidia climb back up to 46.1. Still pumping right now for Nvidia, for the S&P 500 back up, really pushing towards that $4,400 level. We'll be watching that one with back above 34,100 for the Dow Jones, 34,185 for your Dow Jones. Now the overall cryptocurrency market cap was back down today. So the DXY recovered today. Liquidity back out of the cryptocurrency market, and XRP pump did cool off after going back up to 73 cents for XRP. So like I said, overall, the markets are still pumping for the stocks, a little bit of a bull trap rally for equities, and cryptocurrency just hanging out sideways, Bitcoin at 34 and XRP back below 70 cents, still holding out strong. But was this just a pump leading up to the swell conference for XRP? Let me know what you guys think about this XRP pump. I've been calling this bull trap rally for Bitcoin since it was at 30K. That was obviously a bad call as Bitcoin went all the way up to 36,000. Thank God I wasn't in a Bitcoin short like I have been so many times over the past year, shorting the heck out of Bitcoin. I would have been cleaned out on this trade, but we are watching as Bitcoin starting to cool off a little bit. And XRP cooling off as well with it. But let's get right on into the update, guys. That is your market update for this morning. Of course, we're here to talk about real estate, but you're going to lose your shirt or get caught holding the bag if you go into this asset class without a fundamental understanding of financial markets and our economy. Now, the two fatal mistakes that I think most investors, most home buyers right now are making is that they're listening to their mortgage lender who's telling them, date the rate and marry the home. So don't worry about it. Just sign on the dotted line right now because you can count on being able to refinance later. I think that's a fatal mistake. The Fed is saying that they're going to keep rates higher for longer, and they have to if they want to be able to fight inflation. Although most folks do believe that the cuts will be coming in next year, we will get rate cuts. you have to be prepared to make your payments at the current rates, and you got to make sure that that deal is going to cash flow from day one. Now, the second fatal mistake that I think that investors are making is that they are counting that we won't have a recession, that there's no chance of a recession. If I look at Main Street, if I look at the real economy that I see, the Main Street economy, as a small business owner, we are in contraction. Folks are feeling it. They're getting tight. Although we just posted a 4.9% GDP last month, this has all been papered over. This is all being covered over. This is one big mirage in fake economic data. But if you look at Main Street, you can see that the recession is already here and the inflation is much worse than 3.7%. And so these are the two fatal mistakes that real estate investors are making right now and home buyers right now. Even folks that are just buying their personal home thinking that they're going to be able to refinance later, right? And that we're never going to have a recession. Those are the two fatal flaws that real estate investors are making right now. Of course, I could debate with the CNBC talking head pundits on whether or not we're in a recession till the sun comes up tomorrow. But what's also interesting to take a look at right now is how perfectly we are aligned for a historical market correction. And I'm talking about the equities market. We see that the last 3 crashes took place within an election year. So we just so happen to be coming up on another one. We are about 1 year away from our next election in 2024. And we see this post here from Finance Lot where he shows us that in 2020, we got that March 2020 simulation events that gave us that crash leading up to the 2020 election. And then in 2008 and 2000, we had crashes in September leading up to those elections. So let me know in the comments down below whether or not you think that we're going to see another market crash in this election cycle. And speaking of crashes, we have just gone through the worst crash in the history of the US bond market. Now, why does this matter? How does it pertain to real estate? Well, of course, the 10-year bond is what we base the 30-year fixed mortgage off of, right? So we've seen yields on both the 2-year, the 10-year, and all the treasury have gone way up, right? Levels that we haven't seen since 2006 and 2007. Who's buying these anymore? Well, funny enough, the Federal Reserve now owns 18% of U.S. Treasuries. Nobody wants to buy this crap. And our enemies, and even our friends too, are dumping treasuries at the fastest pace in decades. China's U.S. Treasury holdings are now at a 14-year low. The entire planet is watching what the Bank of Japan will do regarding the yield curve control. But the point here is that Janet Yellen said last week, the surge in yields is due to a strong economy. That is a bold-faced lie. It suggests a distrust in American debt, which was downgraded in August. That's right, folks. We just had U.S. debt downgraded in August, and we just had a Treasury auction that failed. Right? They have auctions for these Treasury bonds, these T-bills, where you get to bid them up and you get to buy them. Well, this is why the returns on those, the rates have gone up so high, is because they can't find buyers. So they're having to provide a higher and higher rate. And so it suggests a distrust in American debt, which was downgraded in August. And Janet Yellen, she's got one thing right, that we are about to see a gradual decrease in the dollar's proportion of global reserves. So people are not using our dollar for trade or settlement, and now they're dumping our bonds at the fastest pace in decades. And like I showed you guys already, this is your 2-year Treasury that is back up above 5%. It got all the way up to basically 5.25%. And this is a level that we have not seen since 2006. For the 10-year Treasury, we're back to levels that we haven't seen since 2007, 2006 as well too. So back to the great financial crisis. And this 10-year back above 5% is what took our mortgage rates back above 8%, right? This is all related. But now that I've laid out that picture, the fundamentals of what's taking place in the financial markets and the economy, let's relate this back to real estate. Let's get it. So now that we know we are living through the worst crash in the history of the US bond market, we are set for a historical correction in equities. We are actually starting to see the economy break, and it's with companies like WeWork that is now on the front page of all of the headlines, as we see that WeWork, once valued at $47 billion, has just filed for bankruptcy. And this is part of the zombie companies, the happy slappy good old days that we had during the 2020s through 2022, last year during the real estate peak. That was all fine and dandy. It was all fun. Everybody was winning and getting participation trophies. Nobody had to pay student loan debt. Nobody had to pay your mortgage. Nobody had to pay for anything. And in fact, you got free money. Everybody was winning. everybody was, going to go collaborate at WeWork. And now the company, which was the darling, one of these big IPOs that was at $47 billion valuation, is now at less than $1 per share and has collapsed 99.7%. So how does this relate to real estate? Well, it leads to the collapse of commercial real estate across all of the major cities, which were already seen underway. This is from Triple Net Investor. San Francisco is terrible, but Portland's real estate office market is downright scary. The iconic American Bank building near the courthouse recently sold for $13.6 million, which equates to a shocking $75 per square foot. The last time the building changed hands was in 2014 at $45.1 million, or $245 million a square foot. See, folks, what we're about to see is folks are going to be basically giving away these buildings, relatively speaking, right? And they're going to have to come in at way less than the cost of construction, because you're going to have to convert them to something that actually makes sense. We don't need these office buildings, right? We don't need these spaces anymore. Now, this is a 70% haircut and probably an even steeper discount to its pre-pandemic highs. With nearly a third of Portland office buildings near empty, it looks like the early innings of a massive value destruction for Portland, which shows little signs of recovering. So some of these markets you're going to want to move into with some serious protection. You're going to want to put the 6-shooter on the hip before you go to take a look at your investment opportunity here. But like this is just one example of many cities across this country. 30% of their office buildings are empty, vacant. And this is the opportunity for commercial conversion. This is where we can step in and maybe convert some of these buildings. We're going to have to get them way below the cost of construction, most likely, because we're going to have to retrofit them and update them and transition them. You're going to see this across the country, transitioning these buildings, like these office buildings, to, micro apartments. I call them coffin apartments, but micro apartments. And I think for me, this is part of the investment opportunity that I'm looking at in utility housing. People still need utility housing. There's a shortage of quality homes in quality neighborhoods. And some city folks are just happy slappy to go live in one of these converted office buildings that's going to be new apartments. That's an opportunity for investors. But we're seeing the collapse of commercial real estate already well underway. And we're also seeing that the big equity guys are also taking a beating as well. Blackstone Real Estate Investment Trust, the people everyone said would buy up all the housing, has lost $12.5 billion in redemptions and has $66 billion remaining. They are only allowing 56% of sales requests to be honored, meaning they are not letting investors sell. And this is part of doing your due diligence when you do investments with groups like this, is understanding the rules and the functions that they have as the owner of these funds. The end of the day, the buck stops with them, and if they don't want to sell, they're not going to sell. Now, if you want to put in your redemption to get your money out, you can do that. And that's why they've lost $12 billion in redemptions. But at the end of the day, they're going to decide the investment opportunity and whether or not you're going to be selling. This is why they're only honoring 56% of sale requests to be honored. This just shows you the trend, though. We're seeing the big high-flying commercial real estate markets, these cities, big cyclical markets, are already into a deep, deep correction. 20% plus is kind of a technical level for correction. As I just showed you, 70% correction for the last sale price of that one office building. And we're seeing this across cities across America. Now, the mortgage lenders know this. The mortgage-backed securities are starting to get squeezed as well. We see this news coming out from the DTCC, which is going to be doubling the margin requirements for mortgage-backed securities. Also, MBS VAR stress testing about 50% of banks will have 2 weeks to prepare right when the U.S. government will be shutting down. Well, to me, it is clear the DTCC sees what's coming. And they see what's coming, and it is going to be a big time squeeze of the mortgage-backed securities. This is not just commercial mortgage-backed securities, but this is going to be Main Street mortgage-backed securities as well, right, for residential real estate. And the DTCC, I'm going to be covering them in a separate video here today. I have a lot to cover with the DTCC. So that's going to be in a separate video. It's going to be crypto related. But in regards to trading of securities like mortgage-backed securities, that's what the DTCC does. And they see the writing on the wall, and that's why they're doubling the margin requirements for mortgage-backed securities. So you can see this correction's already here. It's well underway. And these are the markets where if you want to step into, there's going to be plenty of opportunity, right? But you're going to have to really understand some of these markets might not ever recover. So don't catch a falling knife. But on the other end of the spectrum, what's so fascinating is that we are seeing the biggest bubble in the history of the real estate market for the United States is still going on in some markets. This is what's so fascinating. This was listed at $995,000 in Virginia. This post here from John Downs, who is a mortgage advisor. This is 30 to 45 minute commute to DC. Today it received 13 offers and the winner went north of 1.125 million with no contingencies. The burbs of DC are on fire. Inventory is down 70% from 2019 with very little new construction. This pain will persist for some time. So on one end of the spectrum, we have markets where there still is 13 plus offers and they're going over $100,000 over the asking price with no contingencies because folks are so desperate to get into the burbs, to get out of DC. And DC is a ghost town. I mean, talk about markets that are in a historical correction and are absolutely cleaned out. And we'll see if they ever do recover. DC might have an opportunity there. They got a lot to clean up over there. But the inventory in the suburbs around DC is down 70% from 2019 levels with not much new construction. That's why their market's still going up. And so this is why I say not all markets are created equal. For us as real estate investors, we need to understand what niche, what segment, sector of the real estate asset class we're going into. And then we have to understand the dynamics, the supply side dynamics of the city or the town that we're investing in as well. If you're in one of these markets like in the Sun Belt where you have a bunch of Wall Street investors that have, just flooded into the market with a bunch of capital who are now actually selling and offloading, and these are investors who are being forced to sell, and they're, they don't care about being locked into a 3% mortgage, right? They're not a homeowner that's living, an owner-occupied home. This is a Wall Street firm that has bought up 1,000 homes in the town, and now they're going to start haircutting and start offloading some of that portfolio. As I showed you guys with the Blackstone Real Estate Investment Trust, they've already lost $12.5 billion in redemptions, and they're only allowing 56% of sales requests to go through. If they were letting all of their sales requests to go through, they would be offloading thousands of properties across the country. So this is why you have to understand the dynamics within your town, within your city, and then within the segment of real estate that you're investing in. If you're going into commercial right now and you're looking at converting maybe some of these properties, there's plenty of opportunities. There's buildings in my town right now, restaurants that have been empty for decades, and they're trying to sell them as tear down the old restaurant that's dilapidated and has been here for decades and throw up apartment buildings. That's what they want you to do. And so that's why there's going to be plenty of opportunity for commercial conversion because these cities are desperate. Like I said, you might have to throw the 6-shooter on your hip when you go to visit the property, but there's going to be plenty of opportunity. On the other end of the spectrum, you might still be in a market like I am where supply is coming online, but there's so many new people moving in. We have so much positive migration that we are still moving up. Actually, my market was down about 3.5%. My county was year over year. But, over the last couple years, my market's been booming because we have investors, we have people that were fleeing California, they were fleeing Seattle, and they were coming up to my neck of the woods. And then, of course, where I live, we still have a bunch of Canadians that are buying up our real estate as well. So this is why I say not all markets are created equal. It's up to you as whether you're just, buying your personal home or whether you're looking to be an investor to understand your market and understand the segment that you're going into. What is the business model that's going to back and cash flow that property for you? It's an incredible time. And for me, don't make the 2 fatal mistakes that I listed off earlier in the show. right? Don't count on being able to refinance your rate later. Make sure that your cash flow is going to cover debt service from day one, and that you're not going to be counting on being able to refinance at cheaper rates later. The other thing is I am investing as if we are going into a recession, a historical correction for equities, and we already have confirmed the worst crash in history for bonds. So understand what that means to your real estate investment opportunity before you move on into the asset class. And I think that you're going to have incredible success if you remain patient and you understand the broader financial and macroeconomic picture. That's why I do what I do here on my show. If you're looking to get tapped in with our community, we are having weekly calls with our Discord group. We are having tactical wealth lessons. We just dropped our first one on trust, and we got additional content coming for business development and real estate as well. That's all over at my website, ZachRector.com. I will see you guys in the next one on the way out. If you could do me a big favor by smashing that thumbs up, and if you're new here, make sure you subscribe, hit that notification bell so you don't miss any of our updates and content. I will see you guys in the next one. God bless you all.